Welcome back to the Trading Apologist. My name is Tom, and this is your daily market recap for Monday, December 8th, 2025. And today, the markets pulled back a little bit, which we expected after 10 historic days up for equal weighted tech and for transportation. Of course, we are going to see some kind of correction after a historic run like that. But broadly speaking, once we look at the indices, you will see that we are generally still grinding sideways. And from a seasonality perspective, that aligns very well with this chart of the average path for December's after we see a 2% or greater move the week of Thanksgiving. So this is suggesting that we are right on schedule for a Santa rally. Hate saying that, but we are. And that means that roughly around the 17th to the 23rd, we should really see things accelerate. And this bit of chop and indecision is completely normal and what we should expect at the moment. In terms of the week ahead, this is most likely going to be a volatile week with FOMC on Wednesday. Really watch the press conference after the announcement because we have 95% odds now of a 25 basis point rate cut coming, but the market is going to react to the tone and the forward guidance, and many analysts are projecting that the market is soon going to start pricing in high odds of a January rate cut as well. So look out for that. In terms of earnings, this is one of the last big earnings weeks before the holidays, and we have AVGO on Thursday, which is the one that I'm really watching. And on Wednesday, we have Oracle, which has been very beaten up. I suppose the price action would suggest that that stock is going to move on earnings. And we did see some dark pool transactions on that last week, as well as Adobe. We should pull up Adobe when we get into the charts. But keep an eye on those two. But FOMC is really going to be the main thing that moves markets. So let's get right into the charts. Today, I want to focus just on a couple small trades I took today to take some profits off the table on a couple of volatile assets. Just wanted to de-risk those particular plays before getting into FOMC. But outside of that, we covered a lot of the active trades already on Friday. So I want to just look at some of the good setups for the week ahead. I'm going to try to keep it a bit shorter because it's already 10 p.m. and I want to be sharp and ready to go at the open tomorrow. So let's dive right in. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Okay, starting on the S&P 500, and you can see that drop that we experienced at the beginning of the day today, then bounced and recovered, and we're kind of into this resistance zone here that we've been playing around on either end of over the last couple of months at 68, 64, but really we're holding above 6,800 even on that pullback, and we made an equal low to the 4th of December. We did break the swing low from Friday, but we're looking at this on the 1 hour time frame. So I'm not too concerned about that. The market does need to cool off, and we got RSI to reset on the 1 hour and a mean reversion dot without really, honestly, much meaningful pullback. So not much to say here outside of things consolidating, and similar for the NASDAQ where we pulled back, we got into that 25,500 support zone. And so it was good to see that held, bounced up, and recovered. Both of these did roughly 50% of the move. Let's see where we bounced to. Yeah, pretty much bounced back up to the 50%. Why don't we look back at the S&P 500 as well? And I'll make that a little larger. And in terms of the drop, pierced the 50% a little bit and dropped right back down below. So even on small time frames, you can see how important that psychological 50% is. So we're in the weaker half of the range, but I anticipate more chop, maybe a bit more of a pullback. And like we said on Friday, unless we drop below 6,700 on the S&P 500, I'm not concerned. And that equivalent level for me on the NASDAQ would be 24,900. Let's just say 25,000 on the NASDAQ for that line that we would want to hold on any bigger pullback. All right, while the indices were weak, both of them, semiconductors as a whole were very strong, and SMH almost made a fresh all-time high, 8 days straight up in this swing now. So things are getting a little overheated, not really on the daily. The daily has room to run, but on the 4 hour, mean reversion has spiked. But It does look like SMH wants to run a little bit more, if I'm honest. Probably wants to break into fresh all-time highs around 380 before it's set to make a correction. So keep an eye on that. All right, I did get a request in YouTube to cover Chinese stocks. HSI pulled back a little bit today. A lot of names were watching, like JD, Bilibili, Baba, Baidu. They all have been underperforming right now, and I still think they are going to perform well in the future. And the market's just waiting for a catalyst, maybe another liquidity injection by the CCP. Who knows what, but it's not their time right now. So I will talk about these names more in the future. But right now, there are more interesting active trades to pay attention to, and we'll look for these setups once they bottom out and potentially provide an opportunity in Q1. All right, Tesla, let's talk about it, because on Friday, on at least the daily chart, it looked like momentum was pointing to a potential break higher above that 475, potentially to 500. We noted that the 4-hour chart was overheated in terms of RSI and mean reversion. So there was a chance we could correct here at this point, confluence model, upper cloud, or break through. The velocity of the daily and how it was starting to go vertical had me think that momentum was going to accelerate and we were going to see more of that, I guess, explosive blow-off move. But we are getting this correction now, which honestly is a good thing, because if we would have gotten the chart to just continue in a vertical fashion on the daily, it would have most likely led to a more extreme correction. And I'm hoping that we can just get a measured correction now on the 4-hour, then find a point to bounce for that eventual reset. And I'm thinking that support should now be coming in between 415 to 420. Really, 420 is the zone that I'm targeting, and we'll go to the daily to tell you why that is the particular area. And if we zoom in here on the daily, you can see that we have just a little bit of a gap up from our close here at 418, and then we gapped up on our open all the way up to 424. Now, I suppose we did wick down that particular day, so there's not a true gap because we do have that wick kind of closing it, and we don't have any open price action on the chart like we do with this gap right here. But I still pay attention to those when we get a little correction. And the other reason I'm paying attention to that is because if we measure out the top of our local move down to the bottom, that's exactly at the 50% level as well. So that tends to be a magnet for price action. And if we exceed that a little bit, that 415 where these previous wick lows are, that is most likely going to provide good support. And if we go back over to the 4-hour, just to see a little bit more detail in the price action, you can see how we have all these lows of our previous consolidation range right there at about that 420. And, 420 provided a ton of support in our consolidation before this as well. And we've already reset to about the 50% on the 4-hour RSI. It might not get our mean reversion all the way reset, but that can get us to a good zone, probably to around that 36 to 38 area where we often bounce on the 4-hour for Tesla. So keep an eye on that. And the other thing just to watch, the reason I thought we would go just a little bit higher, if we are mapping out this double bottom price target right here, and maybe I was just a little too aggressive with it, but if we map that out and project it off the top of this candle, that would have also had us at that 475. That's the other reason I was thinking we would go a little bit higher. We now do have a sell signal. The trend hasn't flipped yet on the 4-hour, but Tesla acts erratically sometimes. Even though you have this massive reversal candle, I wouldn't put it past it. I know I'm saying a little bit of the up, down, or sideways, but Tesla does crazy things sometimes where it could all of a sudden jump up and tag this and then still continue with a little bit of the reset. So, it's a bit squirrely right now. Keep your eyes on it. Okay, getting into some of the active trades, and Deckers has broken through resistance. My calls are now up 75%, which is exciting. And I'm getting ready to start unloading some of them. We have more to go on mean reversion on the daily, but since we have almost closed this gap, which is sitting at 102.50, we closed today at 101.21. It is time to get rid of some of those. I still think we're probably going to push up into the 200-day moving average around this 106 price point before seeing a bit of a correction. But if you are in this trade, it would be advisable, I would say, to look at scaling out of it now. And then on a pullback, you can always look at getting back in. And hopefully that 93 zone would hold on a pullback for a continuation in this overall recovery in retail, apparel, and it has been doing well, and that's starting to move into sneakers. All right, one that really broke out today is Unity Software, which if you recall, we were getting in down here at about 37. We hit 49 today. So if you're in that trade from the lows, you are doing quite well on your spot or your options. And the overall price target, let me remove the fib levels and let's get rid of the Confluence Cloud too, just to look at this in a bit more detail. So we had this massive falling wedge. The price target from the falling wedge, and why do I have that open? Sorry, guys. Let's keep it focused on the price action. The target from the falling wedge is at 66, but we have something else that's exciting that is now shaped up. We have a confirmed cup and handle. If we draw our lines across here and then we map that out, you've got your cup portion, your handle portion, and the price target for this is all the way up at 78 bucks. So if you got in at that $37 entry, if you were to hit that price target of the $78, that would be a 110% move to the upside on spot. So we can just map that out there. And that gets us to that 78 bucks. And let's just, so you know, I'm not going crazy from that roughly $37 entry all the way to the top, 110%, just over, depending on where you scaled into it. And even if you're just playing the breakout, and it's not going to get there in a straight line, but even if you're just playing this right here to that price target, that's, you know, a nice 64% almost to the upside from there. So Unity is doing well. This is a longer term hold for me, but if we get up to that price point, I might be tempted to take some profits or hedge with covered calls. And if we get a little pullback back into this breakout zone, I'll probably add some shorter expiry calls as well, just to capitalize on that. All right, another trade that broke out today and is starting to recover is Celsius, or CELH, and we have our double top price target here at 37 that we hit perfectly. Now there's another way to measure this. I did this a bit off of log. There's another way that was targeting down at 33 at this white line, but this does look like convincing structure for recovery. And we have two potential targets in play. So we just confirmed this inverse head and shoulders today, which is targeting the 618 level at $49. So that recovery is looking pretty good. But right now, we're into resistance at the 200-day moving average. And if I'm looking at this broader structure and we go out to the daily, and let me turn off my Gann swing indicator. I don't know why I have that on. If we go out to the daily, you can see that as well as the 200-day moving average being right there, we're also into the Confluence model center band right there. So you have 2 points of resistance coming together, and on the 4-hour, we are starting to get a little overextended on RSI and mean reversion. Not terribly, but if we're hitting those levels into a resistance zone like that, it does suggest that we could potentially see a bit of correction. So what I'm wondering now is we have this other dip over here, and if we draw a line across all of that and we're into resistance, let's bring back the 200-day moving average. Do we have potential to form an even larger inverse head and shoulders where we have our left shoulder, our head, now our right shoulder? And if we were to map out a potential price target for that, assuming this all confirms, you know, this is a bit speculative, but we've seen this play out on other assets that we've been talking about, like I think it was CleanSpark. And we were looking at this on Solana too, and it was a bit ugly, but it came together. This would be targeting roughly around $52, which is this resistance line up here, these previous lows in between the double top. So it makes a lot of sense as a price target. So keep your eyes on Celsius. I'm already fairly deployed in this position, But if we see that pullback, I would be tempted to add a little bit more to it because it just seems like it's forming such a good basing structure. All right, BBAI. This is one that I took profits on today, but I want to reload. It's just a volatile name. We have this falling wedge breakout with the target at around 950. And I sold parts of my calls already because I've been in it for a while, up on this spike for about a 40% profit. And we got back up there last week when we broke out of the falling wedge. And I held and I sold today only at about, I think it was 11 or 13% profit. So a little bit of pullback reduction in volatility makes a big difference. So my average between these two is in the low, like 22, 23% profit overall between those two exits. But the reason I exited is because the 4-hour chart looks like it wants to cool off a little bit more. And we're going into FOMC. So I'm just going to look for a little bit of a pullback. The ideal would be pullback, back test, something like this for support before moving away to the price target. And I'm just going to look to see if I can reload on those at a lower price point. So keep your eyes on this. And I think the thing to look for with a lot of these is on the 1-hour chart. Do we get oversold conditions on the 1-hour to continue the uptrend? So do we get a mean reversion dot? Do we hit RSI? And actually, maybe we don't hit the trend line, but perhaps we just get to that $6 mark, which on the 1-hour seems to be our point of control. So keep an eye on that and finding support at this previous consolidation zone. Actually, our point of control is actually where we rejected at 718 if we see more price action, but second point of control. Oh man, I almost forgot to cover ALAB too. There are so many good setups right now that I could spend probably 2 hours going through all the charts and talking through them, but we got to focus and pick a few trades. So ALAB, like we were talking about on Friday, closed just above this trend line, and we had follow through today. Now, we still want to get above this swing high at 182, but for all intents and purposes, this move looks really good. Let's go into the 4-hour to see if we can get any more clarity or detail. Yeah, we're getting a little bit overheated, but I think this has got more gas in the tank to maybe get us to these previous swing highs around that psychological $200 level. And then perhaps we see a bit of a cool off from there. But ultimately, our price target, because we had a big falling wedge, which isn't drawn out here, but it's way back up at that $260 level. So I think within the next couple of months, ALAB is going to get there. Seeing this recovery, especially after this big fear day of selling on the Oracle and AMD news, is great. Okay, RGTI struggling a little bit at the 50%. Sorry, just cleaning things up here. And I unloaded half my call position because of moving into FOMC and because of how volatile this name can be. On the daily, obviously, it looks like it has a lot more room to run. But on the 4-hour, we have that mean reversion dot. It just looked like we were correcting a little bit. And if we go into the 1-hour, the 1-hour broke back into the Confluence Model center cloud and is now finding a bit of resistance there. Seems like it needs to reset a little bit more. So I just wanted to lock in some profits moving into FOMC, and off the position we got into in the middle of last week, those calls were up at about 82 or 84%. Today they were only up 44%, so still a decent gain. But when you're selling short expiry calls, if you can sell when the volatility spikes, you can do much better on those. But I was happy to at least lock in profits on half of those and pretty much make the position, well, not quite risk-free, but fairly risk-off. And if we pull back to anywhere in this consolidation zone, I would look to reload. And then on D-Wave, that is actually holding up a little bit better. We're back up above the 50%. This bounced up today, and I was able to sell my position at almost 80% profits. But this one, I only sold 25% of my position. Even though it's a little more overheated, it's holding up stronger. And if you go in just to get some detail on the 1-hour, and we look at these in contrast, it's always interesting to look at relative strength and relative weakness. RGTI, for its part, broke down and is fighting resistance on the overside. This is finding support there and looks like it could continue higher, even though this is closer to its price target. The price target from the bottoming structure for this was 30, and we almost got there. RGTI, we got to 29 and change. RGTI is still way off of that. If we go back over there, RGTI's price target off the bottoming pattern is $33, which is way up here. And we've got a long way to go. So still interested in these. Ideally, they cool off a little bit, and I would love to get back in after that volatility window of FOMC is behind us. All right, crypto was a little bit weak today. Let's just look at Bitcoin and Solana really quickly. And then I want to get into a few chart requests, and then we will call it a night. And I don't know why my trading view jumps like that sometimes. It has a mind of its own. But overall, in this structure since the 21st of November, we're still making higher highs, higher lows, higher highs, higher lows, higher highs. And I just drew this in because someone on Patreon was mapping it out. Was it Birdwatcher? Oh man, I'm getting it all mixed up now. Anyway, the point is we're tightening up in this range. We are still fighting this trend line, which I'll zoom out to show you in just a second. Tried to break out from it again this morning. And this is going to make a decision, honestly, by, well, that would be Thursday at the apex, probably by FOMC, if this is going to break up or down. So you can watch that little symmetrical triangle just to give you a lead and a near-term price target. But in terms of that trend line that we were talking about, we have touch point 1, 2, 3, 4 now attempting to break out. We still have one bigger trend line overhead, but this is the exact same setup for ETH, for Solana, for MicroStrategy. So let's just scroll through those really quickly, and it's essentially the same chart. All right, looking at Solana, and I turned off the confluence model so we can see things a bit better, but it generally is that same structure where we are into this trend line, and 1, 2, 3, now attempting a fourth time breakout, got actually a bit rejected today. So same thing on Solana here. Pulling back, needs to mount some strength to see if we can get that recovery. And let's just see if we can find some kind of tightening range on Solana as well while we're here. And I mean, we could map something out. It's not great because we only have 2 touch points on the top and bottom. I normally, this essentially is just going off our trend line, for any kind of symmetrical triangle, I like to see at least 5 touch points to make it valid. Right now, we only have 3. So maybe we're getting our 5th here. We're coming into that, and then we can break up. That would be the hopeful scenario. So let's keep an eye on that for Solana. And then if we go over to Ethereum, and let's turn off the confluence model for ETH as well, we essentially have that same overhead resistance, and we have those same 1, 2, 3, 4 touch points. And you could make an argument for ETH as well that we have a similar tightening range. It's not a huge tightening range, but you could say that's the top and that's your bottom right there. And you have 1, 2, 3, 4, almost 5 touch points. So this one is actually looking a little bit stronger with how it's drifting up compared to Solana, but that dynamic shifts all the time between the two assets. And last one would be MicroStrategy. And MicroStrategy, if we go into the 4-hour, you can see we have that same setup with the trend line, and 1, 2, 3, now attempting 4 on that breakout potentially. They had a massive Bitcoin buy today, and the market did not hate it. And this has actually been very stable, all things considered, holding at that 183 level. All right, last few chart requests. The first one is for Nexus, and I missed his chart request in our Patreon weekly market prep call, so apologies for that, sir. But we'll look at SoundHound now, and I have not looked at this one in quite some time. I guess it can't have been that long because we definitely have fib levels drawn up. All right, let's look at this on the weekly. Oh, yeah. No, we did talk about this. Am I going crazy? All right, you guys don't need to know about that. I could have sworn we looked at this last night. But broadly speaking, this has been in a tightening range since December of 24, but massive swings in either direction. Our trend has not really turned yet, but we are above the 200-day moving average. A little bit of a pullback this week, but the weekly trend has not flipped either. So let's go into the daily, and I'll turn the fibs back on just to see what we can see there on the daily. And on the daily, we had this uptrend that broke. The rest is history. We could now map out our downtrend on the daily, which we broke. We have our 1, 2, third touch point here, fourth time breakout, back test for support. So in terms of a trend line break, and we could, see more detail on this on the 4-hour, but it's pretty textbook in terms of the fourth time breakout, back test for support, move away. Daily trend hasn't quite flipped yet. A little bit of resistance at the 236 level from this overall range, but that's to be expected. And you have a lot of previous price action right around here, this gap up and then down for support. So anyway, it's reacting to the levels beautifully. The daily has a ton of room to run. I would imagine the daily trend is going to flip positive, so it could be a good entry. And after an extreme pullback like this, you should expect at least a move to the 50%. So, that'd be about 28% to the upside from here. If it's a weaker bounce, maybe only 17% to the 382. But I think given the hype that had been behind this stock, we could potentially get back up to the 618, which would almost be 40% upside from here. Now, if we look at it on the 4-hour, the 4-hour does have a mean reversion dot and is close to 70 on the RSI. So it's not super overheated, but could use a little bit of a pullback. And we can see more of the basing structure here. And just seeing if there was maybe, well, you could actually make an argument. The shoulders are a little big, but you have this dip in the middle. If you see a pullback right now, could you treat this as some kind of inverse head and shoulders if you get a pullback down here? That's something to look out for. But overall, I think the recovery is looking good. Maybe you'll get a little bit of near-term weakness, but the daily looks like it has a lot more room to move. All right, SMCI was the other request. And maybe this one was from Birdwatcher. I'm so sorry. I can't remember who made this request. But I haven't looked at SMCI in quite some time. I traded it quite a bit last year. So it's a name I like. And I haven't looked at it before recording this. So you're going to get my first reactions. Let's just clean things up a little bit and look at the overall price action. So the one thing I don't like off the bat, well, I guess we need to look at this on the 4-hour. I was going to say on the daily we broke this trend line, but it's not mapping up on the daily correctly because I have this drawn for the 4-hour, which has extended hours price action, which we should mostly look at for drawing our trend lines because there's so much volatility pre and post market. Now, the one thing I would say, obviously you're oversold on our side, mean reversion, we're coming up, but we're probably going to see a bounce and maybe one more pullback here. That would be the normal path forward. And then I don't love that we're under this trend line, but let's see how that's actually functioning on the 4-hour. So if we're looking at the 4-hour and we're just bringing all this together, I'm just going to turn off the confluence model bands so we can see things a little bit better. Yeah, it's not, a perfect wedge just because of this one wick we had. I guess you could make an argument for drawing the trend line like this, but I had it mirrored up or tightened up a little bit right here to these couple of touch points. Oh, if we were to treat this as a symmetrical triangle that broke bearish, that would suggest much lower prices, but we should probably do this off of log instead of linear because that doesn't even make sense as a price target. So let's do that really quickly. We'll just go here to logarithmic, open that back up, and then we'll take this and map it down and drop it to our breakdown point. All right, and that would have us at $12, which is still, I don't always trust these symmetrical triangles. So let's see what it can do. But on the 4-hour, it looks like it's recovering, getting back into the confluence model. Center cloud, the daily, it's probably going to reject from that $38 level when it comes back up because the confluence model center cloud is right around that point. Let's just sharpen this up here. Yeah, 38. And by the time we intersect it, probably closer to 36 to 37. I would imagine one more little pullback, but if it can get back in the center cloud on the daily, flip the daily trend positive, it could recover, but we're back below the 200-day moving average. We broke this tightening range bearish. It's just not the most inspiring chart. I guess broadly speaking, we didn't break these lows from April of this year. But I think there are stronger setups out there right now. All right, and last one is Adobe, where we had a bit of a sell-off today. There were a ton of dark pool transactions last week, and you can see that massive candle and that standout volume spike there. Now, we have earnings on Adobe on Wednesday of this week, and it has been in, I mean, you can see it just a very, very clear downtrend that we've been in here since, when is that? December of 2024. It's not been able to break above this resistance. And this was the fourth time we were retesting that. 1, 2, 3, 4. So maybe it can break out on earnings and have some volume follow through, but it definitely has a lot of proving to do. We're not necessarily getting the cleanest falling wedge. You could, I guess, try to draw something up here and just ignore this as deviation. I don't like doing that. I would probably draw the wedge more in this line. Let's zoom out a bit more and see if we can find anything on the chart. Yeah, there's not really anything in the chart over there. So I would probably just draw the falling wedge like this to map out my price target. And we do have the touch points, but let's see what it can do on earnings. We're below the 200-day moving average. I think it could be a good value for a longer term play. Just in terms of the generative AI, they are starting to integrate, and they are still integral to graphic design and video production and everything else. And if they can integrate more of that content generation into their tools and adapt to the future of creating content in that way, I think it could be a powerful play. And historically, if we just zoom out to the weekly, just to look at the price levels we're at, we are at the same price levels that we were in January of 2020. So yeah, quite historic lows for Adobe. Let's see what the reaction is on earnings. And I would say this one, since it's been in such a large and long downtrend, I imagine it's going to be a positive earnings pop, but it might be better just to react to what earnings actually brings. Okay, so that is it for the charts. If you are in Oracle or AVGO or Costco or any other name that is reporting this week, obviously watch earnings, but for the rest of us, it's really going to be about FOMC. And the chart setup remains the same to what we were discussing at the end of last week, with many 4-hour charts being overheated, dailies still having room to move. So if we do get a pullback either into FOMC or post FOMC, and you haven't deployed into any positions, that would be, in my view, a good moment to do that, to catch that next higher low as the 4-hour time frame resets, and then we continue our recovery moves on the daily time frame. So that is it for today. I will see you guys tomorrow for another daily recap. Bye for now.